Earlier this month, the small cap Russell 2000 hit a fresh record close. It's something Towle & Co. has been following closely with its Towle Value ETF offering. CEO Chris Towle told me more about his firm's business and focus on small caps. Check it out.
Towle & Co., we've been in business actually since 1981. So this is our 43rd year, and we've been through a lot of these cycles: value, growth, large cap, small cap. And we really serve as a diversification tool for institutional investors, family offices, ultra high net worth. And that seems to be who we serve, folks who have longer time horizons or multi-generational wealth.
So you just launched this ETF focusing on small caps. Tell me more about the ETF and also why small caps?
Well, small caps are really where active management can play a pretty big role, right? It's certainly the most inefficient part of the public equity markets, and it's where we've been for 4 decades. An ETF gives us tremendous flexibility, really removing concerns around taxation for taxable investors, which is not the case typically, right, with a mutual fund or with this SMA program. So that's been very, very beneficial. We've seen some interesting developments in our space, primarily, I call it short-lived alpha or short duration alpha. So you have big spikes in volatility where you can capture quite a bit of excess return. But if you're being driven by tax decisions instead of just pure investment decisions, you can experience some performance decay. So that helps. The ETF will help mitigate that.
Large cap growth stocks have been driving the markets. Where do you think this renewed interest in small caps is coming from?
Yeah, I think we're getting to a point where you're just really overextended in the large cap space. If you just look at the top 5 securities, right, currently they represent about 30% of the market cap of the S&P 500. The previous peak was the dot-com bubble, where they only represented 16%. So if you just think about absolute numbers, it's double the concentration risk today versus back during the dot-com bubble. And I think there's just been a recognition that these things are overbought and overowned, and that some prudence is warranted here in terms of allocating capital out of that space. And we're seeing some movement in that. Since Liberation Day, the small caps have kept up very well with the large cap and broader indices, which is a great signal and great green shoots. Significant outperformance of small caps in August was a real feather. And those of us who are in this space, we're looking forward to what's to come.
Chris, why are we seeing such fertile ground for small cap investments?
Yeah, well, first of all, nobody really owns small caps, right? I mean, it's just very much a tiny allocation in most institutional portfolios. But there's a set of dynamics that are occurring today because of its deeply undervalued, underowned, but you're heading into a period of time where you're looking at interest rate cuts coming that are very, very significant for small caps. And you see also a policy stance with the one big beautiful bill, right, that's really centered around reshoring and really accelerating the domestic capital cycle. And I think that's really a driver for small cap, especially economically sensitive, pro-cyclical small caps like the securities that we traffic in: materials, industrials, manufacturing, energy, transportation. So we're pretty excited about the macro tailwinds here and where we're headed from here. So that's really what we're excited about, why we think there's fertile ground.
Who is the ideal investor for your ETF?
Well, it's interesting. We really focus not so much on like the profile of a person or asset owner or an allocator. It's really a mindset. And you have to be comfortable being independent. You have to be comfortable looking at owning securities that are really out of favor from a valuation perspective, from a sentiment perspective, and you've got to take the long-term view. Our space is uniquely volatile, right? And so that's why if you have multi-generational capital and you size us the right way, it can be very beneficial over the long run.
I know you spoke about benevolent capitalism. How does that idea fit into the culture of Towle & Co.?
We talk about sort of our purpose in everything we do, whether we're communicating with the client, making investment decisions, dealing with vendors, dealing with partners, is really trying to advance the well-being of others. And I think that is really that's the ultimate goal of capitalism and the beauty of the free enterprise system, if those motives are pure, right? Kind of coming off of that, we've talked a lot about our culture and the importance of crowning the process and not crowning an individual decision maker. So we've worked very hard to build a team that is very supportive of driving our process forward, eliminating blind spots as best we can. So having an environment of safety, psychological safety, a place where vulnerability, humility are critical, where we check ego at the door, and we also lean into cognitive diversity. So we have a very unique set of upbringings and across our team and different industry perspectives, and it's very, very powerful because ultimately we want to fight for the right idea, right? Fight for the best idea to win. And that requires checking your ego and having humility. And so it's been a wonderful journey to put together. We've got a dynamite team at Towle & Co. So we're really grateful. All 8 players.